So you're in South Louisiana and you're worried about insurance. You've heard maybe insurance rates are going up, maybe your flood insurance, home insurance, whatever it is. You're worried about insurance and you're just wondering what's the deal? What's the insurance market right now? Well, today on this podcast, I've got my friend Connor Oviedo on, and he is a licensed insurance agent, and we're going to talk about everything insurance in this podcast. So if you want a little bit of an update on the insurance world, make sure you stay tuned, and we're getting started right now. Welcome to the Living in South Louisiana podcast, episode 5. I got my friend Connor Oviedo on. He is a licensed insurance agent in the state of Louisiana. We're going to be talking about all kinds of things regarding insurance, what the future of insurance holds, flood insurance, home insurance, business insurance. We'll talk about everything in this podcast. Make sure you stay tuned if that sounds like something you'd be interested in. And without further ado, Connor, would you introduce yourself, tell the people who you are, maybe where you grew up, whatever you want to say, whatever you feel comfortable with, tell the people who you are. Who's Connor?
Yeah, well, thank you for having me, by the way. Here, I'm very happy to be here and just talk about everything. Like he said, my name's Connor Oviedo. I actually... I'm actually 22 years old. I graduated from St. Paul's. Shout out to the school. And also, I got into insurance about a year ago. Very blessed. My boss, Mr. Mark Pennison, was blessed me enough to ask me for an opportunity to see if I could grow. And so far, I would say it's working out pretty well, but I'm very happy to be here today. I'm from actually Covington and been around St. Tammany, but I'm with Insurance Advisors of Louisiana. That is the agency name, and it's in Covington as well. Thank you so much again for having me here. It's a pleasure to be able to talk about this.
Absolutely. So first, I guess I want to know what all you're able to sell. So you're a licensed insurance agent. Do you sell car insurance? Do you sell home insurance? What do you sell?
Yeah, so I'm actually licensed in property and casualty. Property and casualty is things like auto, home, and also as well business, flood, anything like that in particular. Also, I mean, this kind of goes hand in hand with the auto, but if you have a boat, we can insure it. And golf carts, you can get insurance for that. ATVs, anything like that that is insurable. Any classic vehicles, we do have a good carrier for that as well. But other than that, we also do life and health. I am not licensed in life and health just yet, but we do have those products there and other licensed agents for that as well. We do dabble in commercial. We did actually partner up with Fontenelle and Goudreau, which is, or F&G if you want to call them, but they actually are located in Metairie. And so in Metairie, they dabble more, or they have a bigger book of business for commercial. And so they're pretty good. And if you do have any questions about that, we'd be happy to introduce you to F&G's team. And it's a pleasure. It's been a pleasure working with them as well.
Sweet. So you're gonna get licensed in life though, or you're not yet?
Yeah, not yet. But I do plan on pursuing going further and getting licensed in that as well.
Okay, so just curious for the people listening who might want to get their license, might want to become an insurance agent themselves, is it hard to do? Is it just because for real estate school, I'm not going to lie, the test is pretty hard, but once you get past the test, you're done. It's like, I would say it took me 2 months of schooling online, but you can also do like a 2 or 4 week course you can take in person. So I did mine online. I was still working at the coffee shop, and I was doing school online. It took me like 2 months. I think it was like November and December. I did my schooling, and then in January, I took my test. I took 3 times before I finally passed state and national, and then I was licensed in February and started the business in March. So I'm curious if it's the same sort of deal for insurance, or what's the process there?
Yeah, so the process is pretty much the same. You can take online courses for it. That's what I did at least, and eventually I went into had to go to Metairie to take my test over there in one of their facilities that they have for testing, and it was quite a bit of studying. It depends on really how you do it on the process. Like me, I worked from the hours that we were open from 8:30 to 5, and then after that it was study time afterwards. So the process was a little longer. However, if you are looking for a job or like to pursue an insurance as a career, and you are offered that, it would probably be best to study as much as possible, or maybe study before, if it helps, before you start working, only because you give yourself enough time to be able to process everything. I know sometimes the harder part would be just, working, and then after that going home and trying to study, because your brain at that point just wants to relax. So I would say it does help. It does help to, if you can, study it as much as possible. Or if you do have a job, maybe like when I was working at a restaurant beforehand, before I got there, that was an idea, just to study, because I had shifts, so study before I went in, things like that. But but it's funny you say that. It took me 3 times as well. And so I mean, it's a pretty challenging exam, but I think the nerves are probably just, you know what I mean, like getting to.
I'm just a bad test taker. Like, I understood the concepts, you know what I mean? But, like, I would just get in there and be like, man. And also, like, I would take a bunch of practice exams, and then the actual exam had none of the questions that were on the practice exam, not even close. So I was like, what is the point? So I quit studying, and I would just try and, like, memorize the answers to the test.
Yeah,
Oh my
well,
gosh.
yeah. I mean, sometimes that helps, but like it's crazy. I'm not sure how many questions yours was. Mine was 160, and so
I think mine was 180.
100. Oh no, okay. If
For
we're
national.
going off numbers, right? No, no, that's pretty funny. Yeah, I mean, but it was like a good experience. Like, I think the nerves got me the first time. Second time, thought I was ready. Third time, took a different approach, which is why I was saying to study beforehand. So we decided that I was going to do what I needed to do at work, and then use the other half of that day that I was at work to study. And after that, I was like, okay, now I got it taken.
Nice.
And
so from start to finish, how long was it when you started school to when you became licensed and started the business?
For me, it took, let's see, I started in November. I actually got licensed in April. And so it was just about 5 months, I would say. I mean, but we've had people that have come in and taken it. Like one person in particular, like, they studied for the whole week before they started the job, and then they took the test that weekend. Passed it. And that's possible. That's absolutely possible. Like you said, though, I'm not like the greatest test taker either, especially in like a high pressure situation. But I mean, the ride was worth it, and I built up a lot of experience in the 5 months before, because I was working and hearing lingo, things like that. So
one thing I've learned from school is that grades don't mean anything. Grades are a scam.
Yeah,
grades do not determine even how smart you are, because there's a lot of intellectual people, a lot of smart people who don't make good grades because they don't turn their stuff in on time, or they're not good test takers, but they're actually really smart. You can have a super high IQ but score badly on a test because you run out of time, brain can't think fast enough. A lot of people who are actually really smart, their brain just doesn't work that fast. And I mean, grades have absolutely no determination on how smart you are or how successful you're going to be in life.
Absolutely.
And so my parents were kind of hard on me about grades. And I made decent grades, and I made myself go through honors courses, and I'm glad I did, because I'd have to like try a lot harder in school to make the grades than I think most people, because I had really bad ADHD. I was all over the place, and so I would stay like hours after school, like taking the test or whatever. But yeah, grades don't mean anything to me. I don't think I'm gonna be hard on my kids about it. I'm gonna want them to turn in their stuff on time. But, like, if they score badly on a test, like, who cares? Do you understand the concept? You know what I mean?
Yeah.
Am I bad? Am I going to be a bad parent? What do you think?
No. I mean, I think honestly, really, it's like you said. I do agree that like a lot of times with the grades, it's not really like that. It's not really like determined. Like, I got like a 19 on my ACT, but I was finishing my classes, for example, with 3.5 or above. Mm-hmm. So it's kind of like a flip, And I know the ACT, it's a shame. That's the heavy, barrel of the load to carry on your back, because that's what's going to lead you into getting your scholarships and all that, I think. But I mean, look, through high school, there were people, and I know you know who I'm talking about, the people that didn't have to study for anything, and they would just pass. I was somewhat like that, but most of the time, I think really the important thing, like for my kids, like in the future, is just the effort that you put in. Like, if I know my kid can get all A's, that's one thing. But if my kid doesn't, at least try. If my son was coming home with C's, but I saw that he was actually putting in the effort to at least get the C's, I would not be upset with
That's
him.
what it's about.
And so that because the effort in the long run and like the drive that you have as a person is going to be the thing that carries you, not necessarily because a piece of paper told you that you can do this and you can't do this.
100%. So tell me why you got into insurance. What made you get into it? Was there a certain person, or were you watching a YouTube video one day? Like, how'd you get into it?
Yeah, so it's funny. I wrestled in high school, and my boss, Mark Pinnison, he actually he was a coach at Hannon High School and over in Covington, and my brother-in-law started working with him. And so after that, my brother and him actually talked one day about me, and I went in for to talk with him, a job interview, and I got into it, and it's funny, and like I feel like it's funny to think back about my knowledge of insurance then and now, because when I in the job interview, I was like, do you have any experience? I was like, I know 15 minutes can save you 15% or more on car insurance.
Yeah, that's right. Everyone knows that one.
Right, and so it has been a good road so far, I would say. I know the market's not the greatest right now, but from him being like Mark Pinnison being my coach, pretty much, and I call him coach, and so he's definitely been a good teacher for us to be able to, he blessed me with the opportunity, because honestly I had no idea what I was going to do, after college, after I did a semester and a half at Southeastern. Had no idea where I was going to go, and I knew I needed something that was going to push me forward, keep me with strong integrity to move forward and actually pursue something that's going to put me in the right path, just life wise. And I mean, it's been working out pretty well. In my fiance, I am getting married. You knew that, but just in case.
Nice.
But we were actually, she's been very supportive of everything. As far as like me going into insurance, I know what everybody's thinking right now is like, insurance. And I'm like, it's not like the most fun thing. Like, if I wanted to talk to some people, I'm like, I don't want to put you to sleep, but what I will say, it's interesting when you're in the action, I guess, and knowing that you can help. One person actually did ask me, they were like, so what made you passionate about what made you passionate about insurance? I said, well, I'm not really passionate about insurance. I was I was majoring in marketing for Southeastern. And so all I knew what I wanted to do is talk to somebody. Like, I wanted to be somebody that I have a job that involved me talking to people, because I love to talk to people.
Okay.
And to help them. And insurance is like the vessel, like that helps me, allows me to do that. So like, a products aside, I just love to talk to people and just help them any way I can.
So for you, what drew you into insurance was the ability to help people and that opportunity, I guess, and that was what you felt was the best way for you to go out and do that, to, I guess, fulfill that part of you that wants to help other people. And insurance did that for you, huh?
Right, absolutely, yeah. I think that I think it's a very good way of being able to help people. I know insurance isn't like I said, the most fun thing. It is something that's necessary though, and it's something that's not going to go away. Like thinking about a job.
I mean, it's been here since like ever, forever.
Yeah. I had to actually look up what the first insurance.
Jesus probably bought insurance.
Right. Yeah, I don't know. I mean, I don't know who came up with the idea, but I mean, in some way, shape, or form, it's something that's necessary. It's going to be around forever. It's been, like you said, forever,
Yeah.
and it'll continue.
Tried and true, just like real estate.
Mm-hmm.
So how do you help people then? Get into some ways how insurance or some of the policies that you sell, maybe, or maybe just your service in general. How do you help people?
Well, most, like, especially right now, it's I know it's like a hard bargain for the market. But whenever we can help somebody, like, there's three ways. Like, for example, like, I know it's not technically all about the money, because you have to think about what you're purchasing. My whole point of like what I do is, whenever I'm selling you a product, I'm going over everything, every possible coverage with you that I could offer you, but then I'm going to explain the coverage that you're buying, so you know what you're buying, and how it's going to benefit you in the long run in case of an emergency, because there's four things that can actually take you out. Just as long as you keep in mind, you're your biggest asset. You are the breadwinner. And so you and your income are the biggest assets that you want to protect, and there's four things that take that away: death, disability, a lawsuit, or a catastrophic loss. Right? And so And so of course like we can prevent or at least help with most of those, like the three. Death not necessarily, but that's what life is for, in case you want to make sure that you leave something for your family behind, or want to have your home paid off in the event that you passed away, things like that. And so that's one of our common questions on our annual review that we have, which is something that uh, our agency does to make sure that we're getting in touch with you. We're touching base so you always hear from us. We want to know anything that's changed for you. Maybe you became a business owner, and so maybe you need to either get commercial insurance, or maybe we need to upgrade your coverage because you are a business owner. But it's all about determining how we can not just save you the most amount of money, but also protect you in the right ways. Make sure you're not paying for something that you don't need, like and causing what we call premium leakage.
I like that term,
Yeah, well, I mean, think about it, like just
premium
for a
leakage.
for a basic home policy, right? Like a homeowners three, like we only write HO3 policies, which is what we call them, and that is like replacement cost policies. We don't dabble with actual cash value, but for that example, if you have no other structures, but you're covering yourself for 10% of your coverage A, so 500,000, right? And then you're covering yourself for 10% of that, and then you're like, then we talk to you about it, and we're like, yeah, you're covered here, and then we catch you on the phone. You go, wait a second, I don't have any other structures. Well, then that's gonna save you some money because we can back that down.
Leakage.
Leakage. It's it's the leakage, the premium leakage, and so or sometimes if you might actually be underinsured. I'm saying that, like, if you have state minimums and you're a business owner and you were in an event like where you were in an at fault accident and you injured that person, you really think that they're just going to stop for the 1530, right? They're coming after you. And so our job is to make sure that we're properly protecting you for that, and just so we can educate you, knowing that forward. But you'll always hear from us. We call you beforehand, before your renewal, about a month out or so, just in case. So not just do we review it with you for your knowledge, but also to see if there's any things, like I said, that have changed for you, or maybe even if it's something that, like, sometimes we find out that people don't even own a property. That's actually, like, funny, but I mean it helps because guess what, at least we know you can get a refund. Just give us, like, we might request like a cash sale deed, just so that way we have that, as we need to provide that for the care. But the three ways we save people money is we make sure all available discounts are applied. So that's another part of the review. We also make sure that we can reshop because we have access to other carriers, to, just in case your auto is high, we can at least look into other options for you and shop around. And then three would just be to make sure that I mean, anytime you can have a bundle opportunity, I know that's like a discount in itself, but just to make sure that that line is like crossed, if we can cross sell or anything like that to save somebody money. But
And number 4 would be to make sure people aren't paying insurance for something that they don't
they don't
have.
have, yeah, right. Well, I think most of the time it comes from people that, like, I guess they let their mortgage know because like, oh, we're selling the house. They got to let them know that at least. But then they forget about the whole insurance side. So I know that has definitely happened multiple times, and they're like, dude, I completely forgot to let you know that I moved. I don't live in the state anymore. And we're like, all right, well, you want a refund? Yeah, I would love a refund. All right.
Okay.
And so their whole year was paid out, and they didn't get anything back for it. But it's just something like, we want to cover you, make sure that we don't leave any I guess you would say any stones unturned for that. So it's very valuable just to understand that if you were to buy a product from me, you're not just buying auto insurance. You're buying my service. We're extra.
I think that a
You
lot
know.
of insurance agents don't really offer that. Like I don't know if like how normal it is, I guess, for insurance agents to call you a year after you bought a policy or whatever, and do an annual review like that. Like I feel like that's not really common practice. So that's something that kind of sets you apart, I would say, huh?
Right. We just, yeah. I would say like it's important. Like if I were just to never talk to him and he notices things like your premium went up, or realize that when he got his renewal, like he didn't have a coverage he thought he had, but like whenever somebody is upset with their insurance, usually they have to call the their agent or their company, whoever they're with, and they have to talk to them. But what we do is we allow the clients to, I guess, rely on us reaching out to them. So and rather than them reach out to us, like, hey, we know that we just wanted to let you know this is the situation. We're working on it for you, and either myself or another agent will be in touch to take care of it for you. But I just wanted to let you know that, and that in itself is valuable. That in itself is helpful. It reassures the client. It reassures us, like, to know, like, well, at least somebody's keeping tabs on it. We didn't let it go. We didn't let anything go back. So, very very good that we have the opportunities, or, like, the chances to get on the phone and talk with people. Just to, there's a difference between having a customer relationship, like you buying a policy from me and then you never hear from me, versus a client relationship that we would have, where it's like, hey, how are you doing, like, check up on you, like,
Mhm.
hey, this is what's going on for your renewal, but also while I'm at it, let's catch up a little bit. I like that. I like the idea of that.
For sure. Yeah, that's pretty cool. I would like to interrupt today's show to say that if you are looking to relocate to South Louisiana, maybe you're coming from California or New York or Florida or Georgia or wherever, or maybe you already live here and you're looking to buy your next house, whatever that happens to be, we've got your back with a smooth move to South Louisiana. All of our contact info is in the description down below, so you can give us a call, shoot us a text, send us an email, or even schedule a Zoom call with us. Like I said, we've got your back. And if you're down here and you're looking to sell a home, only reach out to us if you're looking to get the most amount of money and the least amount of time with the least amount of headache. Back to the show. So one thing I did want to ask you about, because I've heard a lot of people talking about this and worried about this article. There's a couple articles that came out about it, but um, the idea that citizens insurance is going up 63% in, I believe, January. Like, so at the time of this recording, it's December 30th. So in like 2 days, it's supposed to be going up, or it was at least approved to go up by very large amount. So is that true? Is that just a rumor, or what's going on with that?
So that is true. It's a real situation. What's going on with LA citizens taking the increase? We are aware of that happening, and of course, anytime that we can talk to a client that we might have that has a Louisiana product or a Louisiana citizens product. I mean, we try our best to move them away if we can and get them into a better carrier, a better position for themselves. What I'll say is that the thing to think about with it, I know it sounds scary. The whole point of the increase, though, is this. So Louisiana citizens, right? They're the state. There's no competition for them. They have to write. But what they were made for is to be the policy of last resort. And so what that means is, if you can be written to somebody that's not LA citizens, write them to another carrier, if possible. Um, and actually, I believe even then, even before, they're usually about 25% more inflated than, excuse me, the regular market. So when you put that into terms that, like, nobody, not technically anybody wants to necessarily have to go, and it's not like they're bad or anything, but like I said, they were 25% more inflated than usual, but that was in a market that was like, 4 years ago, when there wasn't any bad hurricanes coming through and carriers weren't leaving Louisiana as much. And so now they're put in a situation where they're actually competitive in the market. And because they're actually competitive in today's market, most people are going, they have to take some increase because they weren't designed for that. Now they're becoming like a policy of resort per se, and so they do, like any other carrier that's gonna take a lot of risk or have to write risks. They are also going to make sure that they are covering themselves by putting an increase and being able to do things like pay out claims. Like, you have to raise the premium if you're taking so much risk. If that makes any sense, right?
It does.
Mm-hmm.
That makes sense. That answers my question. So, I wanted to talk about too. So you said there's the four things.
Yeah, the four things that could stop you as your asset.
Yes,
Okay.
which are number one is death.
Death, disablement,
Uh huh.
lawsuit,
Uh
or
huh.
catastrophic loss.
All right. I want you to go into all four of those if you can.
Sure. So, like I said, I think earlier I touched base on like death, and that would fall under life and health. As much as I would like to explain more of what that can cover you for, I'm not licensed for that.
Hmm.
But however, in a lawsuit, for example, if you are in a lawsuit, in case you're at fault or found liable, legally liable for anything, for protection, most people, for example, in their homes will have a $300,000 liability coverage that follows you. In case you accidentally bump grandma and she falls and busts a hip, right? Like, and she comes after you, they can help you up to $300,000, up to that limit, right? And some people choose to do 500,000. Some people have umbrella policies. Are you familiar with those?
What's an umbrella policy?
So an umbrella policy, there's a few requirements for them, but pretty much it's excess liability coverage for yourself. A lot more people that have like the understanding or want to cover their assets more. Like I said earlier, business owners, top line people, knowing that they need protection because if they were in a lawsuit, they would be in a lot of trouble because the person's not coming for the basics; they're coming for everything. They're gonna come after your home, and your family. So to protect yourself from that, the requirements would be at least to have for some most carriers, I believe, but it would be to have 300,000 in liability coverage for your home, and then 250,000 each person, or 500,000 each accident for auto insurance liability limits. So you need those things, but if anything goes past that point in a lawsuit, if it's a vehicle accident and it goes past the 500,000 limit, then now you have excess liability up to a million, 2 million of your choice,
Got it.
because most carriers will offer that. And so that's something that you really need to protect. Disability, right? One of the most very, very, very important coverage, I would say, is definitely if you're in an accident and you're not at fault and you're hit by somebody and you're very injured and they don't have insurance. Very scary situation, very bad situation for you, especially if you don't have uninsured motorist coverage, right? Or underinsured motorist coverage, because now, you don't, like, usually you would report it on their insurance and they would take care of it. But if you have something like that can protect you, it pays for lost wages, uh, sorry, pain and suffering. It also covers for medical payments. But if you don't have that coverage, you're coming out for out of your own pocket for it.
Right.
And so you would want to be reimbursed for the loss of wages that you're going to have afterwards, right? Right? Like if you're forced to not work for 2 weeks, 3 weeks, and you're your breadwinner. You have a home to pay. You have a mortgage to pay. You have your own auto
What you
policy to
gonna
pay.
do?
Right? What are you gonna do, right? And so a lot of time, and so most carriers offer that. I mean, I don't think I've ever seen one that hasn't offered uninsured motorists, but it's just something that definitely would protect you and yourself in a case like that. So that disability right there, right? And then of course I'm sure it also falls into the life and health somewhere, but don't want to push too many, on that one. But yeah, that would be the disability, and then catastrophic loss, of course. Like, we only deal with A-rated carriers. We deal with A-rated carriers with good track records of dealing with claims, things like that. And that's very important. You want a financially stable company to be like, in case your whole house flies away, like Dorothy's did in Wizard of Oz. So you want that coverage. And I know the wind and hail is like the most important, but like catastrophic losses are real and they do happen. Ida, took a lot. In fact, from what I saw in a report, just the amount, just from carriers paying out claims for Louisiana, was $10.9 billion. So everybody, look, and 10.9 billion, that's a lot. That's a lot of like premium to make up for that amount paid out. Yeah, so everybody lost. I mean, it's not just like the people or the carriers, it's everybody. Everybody took a hit from that. And so you're going to see in the market that people's insurance is increasing because some carriers that are still writing, other than the ones that have already pulled out, right? You see carriers pulling out, but you see people that are still financially stable to be able to write, and they're writing, they're taking on more risk. That means they have to put a premium increase on that, if that makes any sense.
So I was gonna ask about that because I do know that there's a few companies that are leaving Louisiana. They're not writing anymore in Louisiana. So is that why? Are they scared of hurricanes?
Well, sometimes sometimes if a carrier, puts himself in a bad position. I mean, not I'm not saying anybody in specifically, but whenever you have something like going on, as far as like a bad hurricane where there was a big payout of I don't know, $10.9 billion,
Yeah.
right? And that happens, you should then at that point there should be big increases to renewals and things like that. Or if you are choosing to write business, it's probably going to be for a greater cost. And I've seen, I believe the new thing is like in a good market back then, right? For a two, like like I would say back then, probably like a few years ago, like when we were hurricane free for at least since I believe either Isaac or Gustav. I think it's
Yeah,
Isaac. That was like the
I remember
last one that we
those.
had. Yeah, and so like we were hurricane free for a while, and minimums, there wasn't too many. Some companies were okay with writing $1,000 deductibles or 1% deductibles for hurricanes or wind hail. But then at some point, I believe, like, 2020, 2021-ish, the minimum became 2%. And so that's what most people were saying was what they wanted, or like at least the carriers saying that's what they wanted, at least for the minimum. And then now I see carriers taking, and they're like, okay, we're writing the risk. It's going to be a higher premium, but your deductible is going to be 5%. 5% of your coverage A, which is where they get that percentage from. Some are 3, some are 4, and some just depend on the area, right? Like, and that's the thing that that is a kicker. So if you are with a stable company right now, and yeah, you might have taken a big hit on your insurance. I would say just to keep in mind if you were looking or shopping around and you move to another carrier, there's a good chance that you may not get those deductibles back that you already have. If you already have something like 2%, 1%. So that's just something that we also advise on as well. Um, just, I mean, 5% is a big, especially if you're in a $500,000 home, right? It's $25,000 for a deductible. So,
Got it. So, I'm curious about what you foresee happening in the future, as far as insurance is concerned. Any insurance, any industry, as far as insurance is concerned. Do you have anything you'd like to fortune tell? Anything, anything you see happening in the future, being in the insurance industry?
I mean, look, it is a good question. And everybody has seen that the market can be really good and the market can be really bad. It's one of those questions where sometimes we get it where 3 months out from somebody renewing, they ask, "Hey, is my rate going to go up?" We can't really tell you that. We can't tell you if it's going to go up, and we can't tell you if it's going to go down. Bad advice, bad advice, or not knowing something. It's better sometimes to just say, "I don't know. We're just gonna have to wait on it, and we'll call you when it happens." But as far look, we really try our best to just pray that there's not really any more bad Idas or Ians or Katrinas coming through. Unfortunately, that's just not the reality. But if we
Right.
can, if you just give the market a chance to stabilize itself, and get somewhere where you can be like, like where if we've been hurricane free for 2 or 3 years, definitely helps the market,
For sure.
and definitely carriers are more willing to write the risks and all that. And so it's just an up and down hill. I wish I could give you a great answer, but one of the things that I wanted to touch base on too, like something like NFIP flood, for example. So like the FEMA plan, I know like on the news they're telling people that they're saying these carriers or the flood carriers, if you have flood insurance, be ready because it's going up to like $1,500, $1,200, whatever the case is. Um, with NFIP flood, right? What they used to do for the rating system is if you lived in Lafayette and then there was another person that lived in Grand Isle and you both had flood insurance, then y'all two are both gonna have the same premium for the flood. Now what they do is risk rating 2.0. And so risk rating 2.0 is all geographical based. So based off of like, and you have your different flood zones, A and AE, and then A01 through. Honestly, I know it's like a good bit of different ones that are, and those are mandatory flood zones. Whenever you purchase a home, you have to have the flood, or a mortgage will make you, unless you paid off your mortgage. Um, but with like flood zone X and C and places that aren't mandatory, 25% of preferred flood zones do flood, by the way. Flood zone X is a preferred flood zone, C is a preferred flood zone. That does not mean that you're not going to flood. They have to base it not just off the geographics. Some carriers actually for private flood will even provide you a history about the area. This many claims happened in the last 50 years in this place based off of for flood claims. And so yeah, like there is going to be increases, but not the way that they're putting it out. Like if you were paying $587, you're not going to be paying $1,200 the next renewal. Like their plan is to do slow, gradual increases of 18%, 20%, 22%, based off your flood zone and area, and then after that, then it will eventually hit its peak. But we're recommending people who have flood, like if they took the 18% increase. Yeah, it's not fun to get an increase on it, but we recommend that you make the payment to renew it, because chances are if you let that lapse, we can't guarantee you that you're going to have $686 rather than $1,200 if you wanted us to write you another,
Yeah,
so just just a heads up on that.
that makes
But
sense. What I tell my clients, as far as like flood zones, is because that's something that everyone worries about, and they're scared of flood zone A, and I guess they're not scared of flood zones X, C, or B. So flood zone A, there's a 26% chance that it will flood badly during the life of a 30-year mortgage. So 1 in 4 homes that are in flood zone A are going to flood, which is why they make you get flood insurance. It's just numbers. Right. So flood zones X, C, and B, that isn't not the case. Like they still can flood, and so what I tell my clients is, most importantly, check their property disclosures. I think the most important thing is, it's on page 5, by the way. You look at page 5, you see, does the seller disclose that the property is flooded, during the period that he owned the property, or does he know of it flooding before he had owned the property? Check that out. See if the property is even flooded before. If he's owned it for 40 years and it's never flooded, he's been through Katrina and he's been through Ida, and if it still hasn't flooded during those two, major events, then I would say you're pretty safe, but not 100% safe. Like anything can happen for sure. It's Louisiana. You can flood in X, C, and B. In 2016, we had a major flood event that, wiped out Livingston Parish, for instance, and a lot of Livingston Parish was in flood zone X. So you're absolutely right. And I think the main things to look for are, how high is the ground? How high is your house built off the ground? How close are you to a body of water? Are you right next to the levee, or like where are you located as far as are you right next to Lake Pontchartrain or what? But I think most importantly, the proof is in the pudding. So you just look at the disclosures, see if the property has flooded before, as far as the seller's knowledge, and then that should, at the very least, lower your stress about the flood zones. And honestly, the only thing that really matters, in my opinion, for the flood zones is whether or not you're going to be required to get the flood insurance. I think most people should get flood insurance in Louisiana anyways, even if they're X, C, and B. I think that you probably, there's cases where you could buy a house and it's like 25 feet off the ground in like flood zone X and nowhere near a body of water. But so, like sometimes, like maybe, it's not necessary. But I would say for most people in Louisiana, would you agree that it's probably a good bet just to get the flood insurance anyways, even if you're not in flood zone A?
yeah, like anything can really happen. Like now, I know I've had clients tell me, and when I offer them flood, and it's funny. They go like, I'm like, are you interested in flood insurance, or do you want to renew your flood insurance? And they say, if this house floods, that's the end of the world. And I'm like, I understand. Like I get it. And you don't think it's necessary, but like you said, anything can happen. And with those statistics, and by the way, that was really good. I didn't know that, but that's something to definitely like look more into. Great, I guess, great advice, really. But whenever like it gets in a situation where I know I've quoted people before, and like because we do actually require ourselves to quote the flood anyways because we need to offer it, and if not it's fine, but we do need a flood rejection form, unless you're in a flood zone A and you need it, like you need it. So but I have had people where I've rated them and they get max NFIP coverage, which is 250,000 for the building and 100,000 for the contents. And one time I did a flood zone X, and the rate was for max NFIP was $520 something dollars, and then I did another one for a flood zone X, which and just 100,000 for the building just to see, and 50,000 for contents. That was like $800. So it's like they're the same flood zone. Shouldn't they be the same? No, because that just pretty much indicates that the system picked up on that location. That even though they're preferred, they have this much percent of flooding. We know in their area there have been this many claims for flooding. So even though they're in a preferred flood zone, they are still at risk.
Mm-hmm.
So sometimes you may really want to consider it then. Like if that should tell you, that should be your indicator. Like, ooh, maybe I should look into that. I mean, but like I said, Blood Zone X is, it's a choice at that point. I guess just how much risk you want to take on, or the whole point of insurance is just to transfer the risk.
Yeah, if you just straight up don't want flood insurance for some reason, at least be built up off the ground. You know what I mean? Do something to hedge your risk, you know?
Yeah, did you know they had house jacks?
Mm-mm.
Yeah. So like we were me and my brother-in-law.
Like a car. Like
Yeah,
you
like
can
a
jack
car.
up a
Yeah,
car.
but I was talking. Look, somebody's gonna be like, "No, there's not, dummy." Like, right? But we were talking. Maybe not me, unless she was joking. But I heard from one of our agents, like, because we were talking about a house that we had passed by a lot, and we realized that they raised it like 4 feet, and they got flood drains now. And I was like, "Man, how did they just lift the house?" And one of the other agents goes, "House jacks." We were like, "House jack?"
If it's already raised, you could lift it up. You know what I mean?
Yeah. I mean, I get. Yeah, I mean, like if you have crawl space already or something like that, maybe. But it was just the daftest thing. Like I had no idea. I was
Car
like,
jacks.
car jacks, right? Yeah, house jacks. Like,
Just
that's heavy
slide it
duty.
under and crank it.
I was like, who's cranking that? Like, like the Trojan Wars and the guys that were running around. Yeah, that's what I'm thinking. The 4 people doing that.
Do you see in the future? I've heard rumors that since we're on the topic of flood insurance, I've heard rumors that maybe in the future everyone in Louisiana is going to be required to have flood insurance, and they're basically just going to sell it right along with wind and hail, or right along with a normal premium for home insurance. They're just going to throw in flood with it, and you had no say. Like basically required. So,
Right.
do you have any? I know you can't predict the future, but have you heard talks about this as well, or is this just the populace getting together and spreading rumors?
Well, I personally haven't heard anything about that. The idea, I'm sure maybe might be there. I haven't. Maybe there's another agent though that has heard something or knows something that's coming for that. It is a bundled deal like to have right now to just get the flood if your flood, for example, is with the same company as your home already, the hazard for fire, lightning, wind, hail, then that's a bundle in itself right there. But it's also another line where it gives the carrier an opportunity to make up for more premium because they're getting more premium based off the payment. Um, but I mean, is there an idea? I mean, like I said, I haven't heard anything about it, but I mean, if there was, or if there is a carrier that's thinking about, we're gonna be the first carrier to do flood. Actually, I don't even know if there would be the first. Maybe there was like that a while ago, but if there is a carrier thinking about doing their home and flood just together and knocking that out in the coverage, I'm sure they're gonna find a way to make up for that premium too, putting it in the home insurance. But yeah, it's funny. It's funny, I guess, just how the market works or different ideas. Carriers are all on their toes, and and they want to make sure that they're insuring themselves just as well as they're insuring you. Like just always be mindful of that. But I think right now we just we need to sit on it, let everything kind of fix itself. Like I said, the market's a constant wave, absolutely
Hmm.
constant. So things might change, might
Yeah.
change. Actually, an agent was talking to me and he said, like 5 years ago for a $200,000 home, right, or 250,000 home, uh, they were like, yeah, like $3,000 for your premium was like unheard of. Or, I'm sorry, I said 300, huh? I meant 3,000. Thousand, but like $3,000 is like, man, that was unheard of, like unspeakable. Like it'd have to be a nice home, a bigger home. But now it's like, well, you come across a premium that's like $3,000 and gives you everything that you need, and you're like, that's not a bad premium at all. And it's funny just the mindset of that. Oh, that's actually not bad, and then you can work with it.
It's like interest rates. It's all like relative to the time period. Like relatively in the last 60 years, do you know what the average interest rate was? It's right about six. Right about six. So we're not even like people think that interest rates are like sky high right now, but it's all relative because what people are used to, they're essentially spoiled. What people are used to in the last few years is like even below 3% interest rates, which is free money, and into like threes and then fours. Then gradually we went up to five, and now we're at 6 and 7, and people are like freaking out. So in 19, I think it was 1986, interest rates were at 17%. It's in that decade. I might have got that year off, but yeah, 17%, like approaching 20%.
That's crazy.
So that is like, you know, that's what we're basically spoiled. That's all I'm trying to say. People, but it's just it's it usually follows inflation. Interest rates kind of mimic inflation a little bit. Whenever we print a ton of money, interest rates go up. But the thing is, like, they can't. I in my opinion, I don't think they're going to keep going up. I think that they're going to be coming down by next year, and I also can't predict the future. Just like insurance, it's kind of it's up and down. It's like looking at a stock. You know what I mean? Like it's a big long chart that doesn't ever stay the same. It goes up and it goes down. It just the market does what the market does. But in my opinion, based on what I've seen, what I've researched, I think interest rates are going to come down next year. I don't think we're gonna if we keep going up. I don't think we're gonna get past 10. I don't think it ever get as bad as it was in 1980s. I really don't.
That's pretty bad.
So like if you're crying about a 6.5% interest rate, just know that like if you are really one generation ago, we had 17% interest rates. You're crying about nothing. Like we're talking like if your interest was $400, we're talking about like $1,000 extra dollars on top of that in interest payments that you don't have anymore. So, and I mean the caveat is back then home prices weren't nearly as high, but it's all relative. Wages weren't as high either.
Yeah, well, that's a common thing too. Common thing, like and I understand, and a lot of times, like it's not something that you necessarily want to hear. Like your rates are going up. It's not fun, but like just think about. I don't know. Well, I also put it in a situation where somebody goes, yeah, like they're like, oh man, I paid this last year. I'm like, yeah, well, your carrier is non-renewing you, so technically, either no insurance versus a higher premium. Like we're giving you, offering you something. And it goes back, like you can have the conversation, like we have the conversation back to the three things that we try and save money, like leaving no stone unturned. Let's also talk about rate retention, or not rate retention, sorry, risk retention. Okay, what are you willing? What are you willing to take on? Like you like I told you earlier, if we move you, you're not going to have the same deductible that you have now. But because we're probably going to put you somewhere and they're going to say, all right, for this area in this place you're going to have this high of a percentage, or they might be like, yeah, you have to have 5% wind hail. But like if you're willing to stick with the carrier that you have, let's talk risk retention and say, okay, you have 2% wind hail right now, and you have $1,000 for your all other perils, fire, lightning. And I know it's Louisiana, so most people care about the wind, hail coverage, hurricane, and which is understandable. Although it's real, the house is burned down every day, or struck by lightning or anything like that. And so it's like, so then we're like, all right, well, if you're willing to, you can always boost your deductibles. That'll drop your rate. If you raise them, then because that's literally how that works. Deductibles, the lower they are, the more expensive it is. I'm sorry, less expensive. Yeah, more expensive. And then the higher deductibles, you're going to drop your rate. But if that's something that you want to do, or if you want to say like, and we can't change your coverage A, like if with a company, like if that's their replacement cost, I mean, we could request them to do another one and just to see. But for the most part, that's everything else is just a percentage. Your coverage B and C and following they're percentages of your coverage A. So we can't really change that. But if while we do the annual reviews again, circling back, like if you don't have any other structures, why are you paying for this? Or if you thought my property, and I tell you, all right, well you have this much for property coverage, personal property coverage. It's at 50%. That's standard. So like if you have a $200,000 coverage A, you're gonna have a $100,000 coverage C for your personal property. So some people, we talk to them and they knew it's inflated and they're at a $350,000 coverage A, and we have to let them know, like, all right, well, that also means that you're at what is it, 17, like something around there. Like so I've talked to them and that, and I'm like, all right, well, you're at 50% personal property. We can make it 40%. That'll drop the rate down because you're taking on more risk, but you're lowering the amount that they're going to pay up to that limit. And they're like, okay, and that's just something that can help too. Like talking about that, some people are okay with taking more risk, and some people are, like in that case, if you're not, I'd recommend maybe you just stick it out, like you just stay with it. I know, but you're not the only one. You are not the, you know what I mean? Like you are not the only one that's going through this. Everybody's on it. Everybody's worried about it.
Anything else that you want to tell the people about insurance, or any other advice you have? You gave a lot of good advice on this podcast, by the way, so I appreciate you coming on and sharing that with the listeners. Anything else that you need to get off your chest?
If you are interested in looking into your insurance, maybe 15 minutes can save you 15% or more on car insurance. But or you could have a Connor. No, it would be a pleasure to work with anybody that is interested in looking into it. I'd be more than happy to help you out. And one part of our service is, even if you wanted me to look into it and give you some rates just to see where you probably stand for your auto or your home right now, if you were to move or you were thinking about it. Part of our service is to also review your coverage with you. And like, even if you're not with us, so a lot of times if somebody sends us their declarations pages just for us to review, and they want to review their coverage, we can do that, and you don't even have to be with us. And plus it's free. You might, like it's free just to add, like it's not going to hurt you to look around. So anytime, and we have plenty of options. We'd be more than happy to bring you. We are like a family environment. And so we would be more than happy to welcome you into our family at Insurance Advisors of Louisiana. Thank you so much again for having me on the podcast. I did enjoy it a lot. It's pretty cool.
Man. And so I guess where do they find you? On your website or?
Yeah,
or
well, yeah, we do have a website, insuranceadvisorsoflouisiana.com. If you are interested in just stopping at the office just to talk with anybody, either myself or any other agent, our address is 111 East McGee Street, and that's in Covington. 70433 is the area code. We also, my personal cell phone is 985-635-1157. And then our office number is 985-809-3878. Something that we also been talking to other people, especially other bird dogs like each other, right? We're available. I'm available at any time. I have my phone on me. That's why I put my personal one. And then my email, if you need it, is cmo@insuranceadvisorsoflouisiana.com.
Perfect. And all this is going to be in the description down below. So if you have any insurance questions, I mean, Connor will just sit there and answer all your questions. He's a smart guy. He knows a lot about insurance, so he's able to provide that value to you guys if you just have any questions or whatever, or if you need a certain policy, Connor's your guy. You can find all the stuff in the description down below. Anything else from you?
Yeah, I just had to say thank you for the comment. I'm smart. My dad doesn't think so.
You're smart.
Appreciate it.
Episode number 5 in the books. Everyone have a great rest of your day.
Happy New Year.